Do you think, well, yes, you can make money if you have a full-time job, but the thing is, to get to the profitability level, you need to put in a lot of effort, a lot of concentrated effort over a several year period. But once you get it, like once you get all the bullshit beliefs out of your system and really can focus on the things that work, I think you can do a lot of things on the side. Like you don't have to focus too much on the market, but it's a very hard thing to do to get to the level where you only focus on like very, very few things. I'm not able to do that, but some people can. But I don't think you can. I don't think it's easy to get to be a profitable trader if you are doing something else full time. It's incredibly hard. It's incredibly hard if you put in a full-time focus. It's even harder if you do something else full time. I don't know. I haven't tried it. I've always focused on this one thing. Except for in the first couple of years where I lost money. Not many popular stocks above the 50-day moving average, but you also have to understand something. Rallies start when very few stocks are above the 50-day moving average, and rallies stop when a lot of stocks are above the 50-day moving average. So it's kind of a good thing that not a lot of stocks are above the 50-day. Doesn't really mean anything. It doesn't mean the rally has to start. We can go much lower, but generally that is true. Do I look for high stock beta, return on equity at least 17%? Yeah, my return on equity cutoff is 17.02%. No, I don't look at many other things. I look at the guidance. The most important thing is the price action and the volume. So basically you want an unanticipated global event to shock the markets. Yeah. This may come to a surprise to some, but it's always the unanticipated things that shock the markets. True story. It's never the anticipated things. It's always the unanticipated. Pfizer positive news. Well, the positive news I see on it is bouncing off the 65 EMA on the 60-minute. That's all the news I need to know. Do you think studying quantitative economics in university is valuable if you want to become a trader? Yes, if you want to work for a hedge fund, sure. To become an investor, completely useless. If you want to make tens of millions or hundreds of millions of personal net worth, you should probably skip it. But if you want to have a fancy job and someone to boss you around, yeah, that makes sense. Well, if you want to study, I don't know, that sounds like a 5-year thingy. During those 5 years, you can already build a significant net worth if you put that time into studying setups and market mechanics instead. You don't have to go to school for that. It's actually better if you don't go to school. Exactly. You're gonna get brainwashed. You're gonna learn a lot of things that don't really work in reality. This is what a good breakout looks on the 60-minute. You have a range, and then you have a breakout, like a forceful breakout with conviction, right? Look at the volume. Look at this candle. It's not inching higher. No, this is a Viagra candle. Being a successful trader is a tough life. Being a consistently successful trader is a tough life, man. You gotta put in so much effort to get to that level. Most people just give up. If you want to be a successful trader, you really need to want it. You really need to want it. If you think you're gonna do this on the side, make some money and then go do some photography or art the rest of your life, you're not gonna make it. Needs to be your calling, otherwise you can just put your money in index funds. You'll be better off. Yeah, you need to be a little bit obsessive. Like you can't have too many other things, You can't focus on too many other things. But it's the same way with everything. You want to be a, I don't know, top performer in any field. It's the same thing. That needs to be your main focus. You can't do something else on the side. It's the same thing in, whatever. It needs to be your main focus. Oh, that's a good question, Wall Street Bull 91. Do I think people underestimate the amount of obsession I still have for performance because they only see 5% of the day? Yeah, I do think people underestimate the amount of work that goes into this, the amount of thought process, the amount of, observation, like really trying to listen. That's something I've become much better at and trying to get even better. Just listen, where's the money flowing? And then you go with it. Try to find stocks within that theme. Once the market confirms the money is flowing into those stocks. Which hurt you more? Missing a breakout or catching a fake out? It depends. It depends on the setup. If it's a really good setup that I've been stalking and I somehow still miss it, that's really bad. But also buying a great breakout, everything is lining up, and then it fails. It's not bad. I mean, it's a good thing. It's a good trade, even if you lose money. There's difference between a good trade and a bad trade, and a winning trade and a losing trade. It doesn't really matter if it works or it doesn't. The main thing is, was it a good setup? It's the same setups all over again. These flags. It really is the same setups all over. Doesn't matter what sector it is, what type of stock it is, it's the same setups. The key is you want to be in the faster moving ones. Like if you have a tiny account, I would recommend, you shouldn't trade sub 5 ADR stocks too much. You can do some here and there, but really try to focus on the higher ADR names as much as possible, because those are the ones that make the biggest moves. You want explosive moves. You don't want to sit in a stock that can go up 10% in a month. You want to be in a stock that go up 50% in a month. Is the short side? No, forget about it. I don't recommend anyone to short. Forget you heard the word. You're gonna have better success not shorting. Most of you. And guys, if you focus on the market, right? If you focus on the setups, looking at the things that's showing relative strength and really try to focus on good setups, you can make money in most market environments. Like if you're one of these growth stock guys, just trading growth stocks or tech stocks or whatever, you would have been killed the past 6-7 months, right? But instead, if you listen to the market, they're completely agnostic what type of stock you trade, you can catch these names. Ford, right? I bought this thing at $20 the second time around, right? Look at this setup. Focus on the relative strength names. MU, the same thing. When I bought it, some people were like, isn't it too late to buy it? Like, what do you see here? Well, it's an EP. It's a stock that's been going sideways for a year. It has a high volume, reported earnings, it beat. It's a classic episodic pivot. Very simple setup, right? And it had been showing relative strength before the EP. You stock the good setups. You look at things that show relative strength. And you can make money no matter what type of stocks lead. You will be in the leaders. Doesn't matter if it's value stocks or growth stocks or shit stocks or quality stocks or this or that.